let's talk about recession, yield curve reversion. It's really related to cap rate expansion, because we would see cap rate expansion most likely during a recession as we look back in a positive economic environment. Even as interest rates rise, there's not much correlation. But let's look at the yield curve right now. This is from last night. We're looking at the 10-year Treasury minus the 2-year Treasury in blue, and then the 10-year Treasury subtracting by the 3-month Treasury. So looking at kind of the longest and kind of a middle duration, and the longer and a very short duration. And then these great areas are recessions. You can see that, the yield curve recession, all the past recessions have been predated by an inversion of the yield curve. Even the coronavirus pandemic, which many people were anticipating a recession prior to COVID really picking up steam. And well, we did have one, although it was the shortest. It was a very short recession. You can see on the far right of your screen, that blue line it's getting pretty low, and that's the 10-2 year spread. But I would also say, and again, this is why we're doing this, to quantify the 10-year minus the 3-month spread is really going the opposite direction. Most of the interest rates are either based for multifamily are either based off the 10-year Treasury, or they're based off of the 30-day SOFR rate. And the SOFR rates, which are going to be much closer to even the shorter duration than the 3-month Treasury, they're still staying very tight. And actually, the SOFR rate is remained unchanged at 0.05%. So what can we do in a recession? Again, similar to cap rate expansion, but more stable markets, ability to hold long. But then 2 tactics that we can utilize, and we do this for all of our projects. We've just learned this over time, is have excess cash reserves, the ability to really to hold through. If we see a drop in occupancy or no rent growth, we still have cash reserves if something happens at the property. Another key tactic that we're really focused on is targeting median demographics. So median demographics is, we're not targeting the highest of the highest of the high end, but we're also not targeting kind of the lowest of the low end. So we're really targeting, most of the assets are going to be kind of solid B-class properties. We may have a nice A- property. We may have a C+ property that we're going to take to a B property, but for the vast majority, the assets in the gray fund are right down the middle, B class. The reason for that is the largest percentage of the population can afford to rent in these communities. So if there is a recession, and as people move from higher incomes and they move down through the ladder, well, they're going to be moving out of those higher end apartment units, or they're selling their home, they're moving into B-class apartments. Then on the upswing, the opposite happens. We have people moving up from C-class apartments through B-class apartments. In general, that's where the majority of demand is. And as individuals kind of move around wherever they are, kind of in the economic spectrum of their income levels and their ability to pay, there's always a large group that can't afford to pay those rents. So targeting those median demographics is a way to really insulate ourselves from some of the more extreme volatility we might see during a recession.